G'day guys, David from the Xylem Zone here. I want to talk to you today about borrowing power. To me, it's the second most important principle you need to understand if you're going out to buy your own home or an investment property. But let's say it's your own home, and if you don't understand this principle, it can literally cost you years and hundreds of thousands of dollars if you don't get a clear understanding of this and then know how to go and take the right steps. So over this little video, I'm going to shit through the right steps, give you some clarity, and then put you in a position when you go out to do the shopping, you go out to get your loan, you're going to have the choices and be able to take the right steps, get the result you want, and not lose years. So what is borrowing power? It's not buying power. Buying power is all about your cash and equity. Check out my other videos on that. That's when you build your deposit and how you leverage that. Borrowing power is all purely about your income. It's all about, and some people call it serviceability, because what the brokers do or the banks do, they get your income position, they punch it into a calculator, and it assesses out how much you can borrow or how much you can service. That's why it's called a servicing calculator. Now the reality is, every single bank and broker has their own servicing calculators, and they change all the time. Sometimes the formula changes from the beginning of the month to the end of the month, depending on whether the bank has a small amount of business or they want a larger amount of business. But bottom line is, it's changing all the time, and if you only shop with one bank and you go to your traditional bank, you can be very upset by the outcome you've got. So here's what can happen. Let's say someone going out to buy a house worth $500,000 and you want a loan for $450,000. And let's say your incomes are $80,000 and $70,000. I won't go into, and you've got a couple of credit cards to the tune of, let's say, $30,000. Now you might only have a balance of $10,000, but your credit card limit's at $30,000. Now when the bank goes out, in this case, if you go to a bank, remember they'll be limited to their range of products. They might only have 4 or 5 products that suit your asset, where you're buying, your particular situation. But if you go to a broker, you can have a choice of 20 or 30 lenders. Remember, there's non-bank lenders, people that lend money as well that aren't major banks, but still just as safe. And then you could have a range of 20, 30, 40, 50 products to choose from. So let's say you went out there. In every case, they punch in your data. There's a little bit more than this. They do an assessment of your living expenses. Now, this is a big one. If your living expenses, if you tap every single thing and item that you do in your whole life, every single bit of money you spend is going to be visible. Traditionally, if you spent a portion of your money with cash, obviously that would not be visible on your credit card statements, and they would do an assessment. So just think about it. If everything's not in an assessment scenario, you may be able to borrow more, but if you tap everything, you may be able to borrow less, because they can see that lunch break you have, that coffee you have, every single transaction gets added onto your living expenses. Anyway, that's the side thing. Let's go and say you put the loan in, and the first bank that you've banked with for years, you want a loan of $450, they've come back and said they will give you $380. Because they assess you as based your age, your job, your income hasn't been as good, your payments haven't, whatever. There's lots of different reasons. The next bank is $395, the next bank is $420, and the next bank is $450, but it's a higher interest rate. And then we go down and someone will lend you $478, but they'll only do 80%, you've only got 10%. And finally you might get one of $500,000 and they'll do a 90% and they've got a good rate. Now let's look at the gap here. You want $450, the gap between what you could get was $120,000. Now you can sit down with a broker and do this actual example here, but if you would have went to the bank that you knew or banked with thinking you're going to be a loyal customer, you would have been at $380 and they wouldn't have given you loans, so you wouldn't be able to buy your property. You're out of the game before you've even started. But if you've then gone and sat with a good broker and looked at the different options, now you've got an option of someone that can do that loan for you at the amount that you want based on your current situation. So that's a key point to understand. The other thing is over here, is there any other things you can take under control that you can do to improve how much you can borrow? Yeah, well, if you've got credit cards at $30,000 and you've only got a balance of 10, if you drop your credit cards down, that'll increase your borrowing power. Because the reality is most banks will factor in that the whole $30,000 of debt because you have the option to spend it. But if you drop your limit, they'll only factor the 10 in. That will increase how much you can borrow. Rolling down bad credit card debt, a whole range of things you can do. Any way you can increase income in your life and decrease bad debt is going to help your borrowing power. And you've got to get that formula right and understand those steps before you even start. Otherwise, you're not in the game. So borrowing power is key. You can have your deposit. If you don't have your borrowing power correct, and your assessment criteria is not right, you won't even be into the game. So guys, sit down with a broker, sit down and look at any ways that you can increase income and reduce bad debt. Find out the different things you can do. Having a budget's really important as well, so you know where your money is. But bottom line is, borrowing power is the key. It's the key twin to buying power. You need both to be able to buy your home. You need both to be able to do anything beyond that. So put some time into it, do some assessments before you start, and then get a plan around that. And if you do that, you'll be on the right track. Anyway, David from the Xylem Zone. Hopefully that's been useful, and look forward to talking to you again soon.